Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. The first whole week of the new year got off to a very volatile start. On Monday, crude oil fell below $50 a barrel for the first time since April of 2009, prompting a big sell-off over concerns that energy industry cuts in capital spending will spread to the rest of the economy. Also hurting markets was an election campaign in Greece that might lead to that country leaving the Eurozone. Motor vehicle worldwide sales for December fell 1.7% to 16.9 million units and fell 2.9% to 13.6 million units for North American sales. However, the numbers are still relatively strong. On Tuesday, oil continued to fall, closing below $48 a barrel, and markets also continued downward, with the S&P 500 declining for the fifth straight day. Factory orders for November were down 0.7%, contracting for the fourth straight month, and the ISM non-manufacturing index fell to 56.2, down from the previous month's unexpectedly high level of 59.3. On Wednesday, markets finally had a strong rally, helped by no surprising news. The Fed released minutes from their December meeting showing that they don't plan on raising interest rates at least through the end of the first quarter. The ADP employment report for December was up 6.2% to 241,000 new jobs, and the trade deficit for November narrowed to $39 billion, due largely to lower oil prices. On Thursday, the market rally continued, with the Dow Industrials closing up 323 points, with investors' mood bolstered by a stabilization of crude oil prices, as well as news that the European Central Bank might start easing monetary policy as early as the end of January. Jobless claims for the week ending January 8th were down 4,000 to 294,000. On Friday, non-farm payrolls for December were 252,000, down from November's 353,000. However, the number was well within economists' expectations, and the unemployment rate dropped to 5.6%. The big disappointment was wage growth. Hourly wages actually declined 5 cents per hour. Markets were down sharply on the news. Now let's take a look at some stocks. Impact's Laboratories shares soared more than 12% Thursday after the pharmaceutical company announced that the FDA has finally approved their drug Rytary for treating Parkinson's after initially rejecting it 2 years ago. Bind Therapeutics announced on Thursday that their first patient was enrolled into a mid-stage trial for their lung cancer drug Bind-014. Shares were up as much as 80% at the opening bell before slightly selling off as the end of the trading day approached. JCPenney Company surprised investors this week after the retail store announced their stores experienced better than expected sales during the recent holidays. The next day, the company then announced that they will be closing 40 stores during the upcoming year, which will affect approximately 2,250 employees. The news of the store closures did not seem to affect share prices, as the retail store appears to be recovering from their recent weak sales. Sprint Corporation shares have been inching upwards following an aggressive marketing campaign by the mobile service carrier. Sprint announced Thursday that it had acquired 967,000 new customers during its third quarter. The new marketing campaign offered users from competing mobile service carriers the opportunity to cut their bills in half. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.